Welcome to Volatility 411 for Equity Armor Investments. I am Joe Tigay. We're seeing the market, the S&P 500, crack the 2,500 level. Now, this area has been a psychological resistance, also a physical resistance. 24.99 is a recent relative high, so getting above that certainly a good sign for the market. Another good sign for the market, obviously, is yesterday's 10% rally. Now, while it is, of course, a good sign in the short term, I think traders should remember historically rallies this big happen in bear markets. In fact, 7 out of the 10 largest rallies in the market history happened in the bear market. Going back to 2008, we saw 2 10% rallies in October, and the market didn't bottom for another 6 months. However, in March, when it did bottom, there was another 10% rally, so I guess it's not impossible the bottom is in. It's just that history is on the side of it still being a bear market. Now, on Monday, when the market was on its low, I can't believe how much we've moved since then, of course, the VIX was not on its high. Maybe that's a good sign for people looking at this being the end of the selling. Maybe the selling has become exhausted, and we're not as panic selling as we were before. Of course, the VIX was at 85. The VIX high was earlier above 90, so maybe a sign that the selling has subsided. We're watching all that. And of course, the rally happened after, number one, the Fed stimulus, and number two, the fiscal stimulus coming out of Congress. The Senate has agreed on a bill. Traders are well remember in 2008, the TARP bill was agreed upon. It failed in the House. That was a day of tremendous volatility. Ultimately, it did get passed. So volatility traders will be on our toes because we do remember that is a possibility. So all the levels are out there. One more that I'm watching is the VVIX. It's at 170, still a very high level for the VVIX. People are still looking at a lot of volatility for the VIX futures. And then the skew, that's at 117, a very low level for the skew, all things considered. Of course, the at-the-money vol is very high, but the bid for the puts are not as high as they were at the start of the sell-off. For Equity Armor Investments, I am Joe Tigay.